And you are good to go.
All right. Good afternoon, ladies and gentlemen. My name is Ed Warren. I am Business Development Director at Dynamis, and I'm here to talk with you today about growing your accounting services practice. I think we've got a lot of people who are being adversely affected by the weather, so I hope wherever you are safe and warm. And with that, let's just launch into things. Again, my name's Ed Warren. I have been doing sales and marketing and business development professionally for over 25 years. I've spent more than 8 in the accounting industry. I've worked for 2 relatively large CPA firms, one top 100 firm and a top 200 firm. And I've been involved in marketing and business development in the CPA profession for different practice areas, including nonprofit and hospitality. But most recently, I got involved in the accounting services area in the last firm I worked for because they had a growing practice and were trying to penetrate the DC market where I was based when I worked for them. Accounting services, or CAS, or client accounting and advisory services, is one of the fastest growing areas in the CPA profession. The president of AICPA quoted a stat last summer at Engage that about 10% of large firm revenues are now coming from accounting services, which is a major switch because 10 years ago, it wasn't even something that was actively being tracked. I think part of that because so much of the work that is now accounting services was really confined to things that were called write-up or bookkeeping or payroll. And it's really only been in the last 5 to 10 years that it has become a standalone offering in many firms. So getting into the specifics of how you grow your practice, I think one of the first important steps is to figure out what you want to focus on. One thing that I have been saying over the last couple of years since I've been a part of the Dynamis practice is that just like firms look for specialties and particular clients will look for a CPA with hospitality or nonprofit expertise, finding expertise as an accounting services provider is important as well, because you don't want to be all things to all people. You know, one of the firms I worked for sort of had an omnivore model where they would work with anybody that they thought could pay their bills. And what ended up happening is they had some expertise in agriculture, they had some expertise in wineries, they had some expertise in online retail. But because they were generalists, they didn't have deep knowledge of any particular area. Just like when I mentioned hospitality and nonprofits, you want to have a firm that has deep strength in nonprofit audit work and nonprofit tax returns and potentially consulting in those firms. If you're building an accounting services practice, you should be looking at the same strategy for building out that practice. There was a good study published about two and a half years ago by CPA.com, which is the technology division of AICPA. And these are the 3 leading areas they identified as niches in accounting services. I will say 2 of these don't really qualify in my mind as niches as much as areas of focus. So professional services, which would include architecture, engineering, medical, veterinary, dental, law firms, professional firms. The second biggest category they identified is small business, and I've seen lots of accounting firms and accounting services firms who talk specifically about they call their practice the entrepreneurial service group or the small business services group. And so they do work with a lot of sole practitioners and small businesses who either don't have or don't want to hire people to do accounting for them. The third biggest segment is nonprofits. And as anybody who works with nonprofits knows, they are focused on overhead and how much it costs them to do the mission-driven work that they do. So they don't necessarily want to have a standalone accounting department. And it makes sense for them to outsource those services, or the accounting services, to a firm that specializes in that work. In terms of best practices for building that niche, I've talked a lot about building the industry expertise providing forward-thinking and decision support types of information and advice to clients, and building a profile in the industry. In Washington, D.C., where I live, there's a guy who started a firm. I think he had been working for a big six firm and decided to go out on his own and built a reputation as a top-notch auditor and accounting services provider in the nonprofit space. They later grew that practice not only to include accounting services and audit work, but consulting and HR as well. That firm was later bought out by a top 25 firm out of New York called Markham. So building the expertise, getting to be well known in a market is just as important in accounting services as it can be in nonprofit, in hospitality, in auto dealerships. Part of what you have to figure out once you've chosen a niche, and maybe you want to figure out who those best prospects are before you decide on a niche, is who do you want to serve? Who do you want to be your customers? And for a lot of people, figuring out that sweet spot is very important in terms of targeting and developing expertise. I mentioned this nonprofit-based firm here in DC. One of the great things about DC, if you're in the nonprofit niche, is a lot of nonprofits and associations have their headquarters in DC, so you don't have to travel far to see your clients. Last time I did a check in the GuideStar database, depending on how you slice and dice it, there's somewhere around 12,000 nonprofits, 501c3s, traditional charitable organizations, and 501c6s, which are associations and business advocacy groups, 12,000 of them within a 50-mile radius of downtown DC. So if you want to be in the nonprofit world as a CPA or as an auditor or as an accounting services provider, DC is a great place to do that. What you also have to figure out is who you want to serve. It is possible to build a very good practice focusing on therapeutic writing services. If that's what you want to do and that's your passion, that's great. The challenge is there are not a lot of them and there are not a lot of big ones. So if in addition to serving that community, you want to build a firm and a legacy, and that may not be the way to go. But if you want to focus on nonprofits that generate between 5 and 30 million in revenue and have between 10 and 50 employees, DC is a great market to do that. So you've got to figure out what your sweet spot is and figure out how to go to market and serve those customers well based on the size and the complexity and the structure of those organizations. Next up, if you're starting a practice, especially from within a CPA firm, is figuring out how to leverage low-hanging fruit. Growing any type of accounting practice is a challenge, but if you're starting an accounting services practice from within the confines of an existing CPA firm, one of the first things you want to do is figure out how to do that well. Interesting stat again from the CPA.com benchmarking study of 2018 is that only 41% of firms, accounting services firms, are happy with their growth rate. I attribute that in part to having an omnivore mentality of trying to serve anybody who you think can pay your bills, as opposed to targeting a specific market segment with specific expertise. I think the other thing is that people sort of wander about trying to figure out how to start the practice. So some of those clients they pick up are clients of opportunity, but not necessarily clients that are the right fit. One of the things that I believe strongly is that if you want to start a practice and build a successful practice, that you need to start with low-hanging fruit, but you need to be selective about who you choose. When I say low-hanging fruit, if you're in a traditional firm, that has a tax practice and some of those tax clients are write-up clients, one of the things that you may want to be looking for is a way to annuitize and distribute the revenue of that write-up relationship. So in a traditional write-up engagement, you may have a client who's got a year's worth of invoices and checks they've written and credit card receipts, and you're literally doing 10 to 12 months worth of work, starting at the end of January. that may be a nice engagement for you. You may have a $3,000 business tax return and advisory work, and a personal tax return may be tied to that depending on the type of business entity. But you're doing all that work during the busiest time of the year. If you were able to convert that client from write-up work to either an ongoing monthly close or a quarterly close where you put together financial statements and cash forecast and tax planning work, and you're doing that work 4 times a year, when you meet with them in October and you've got 3 quarters worth of data, you can tell them how to plan for the next year from a tax perspective and how they're doing while they're in the tax year. What you're also doing is you're taking maybe that $3,000 or $3,500 engagement and splitting it up and adding in the accounting services fees. And maybe what you're doing is you're turning that $3,500 yearly engagement into a $4,000 or $4,500 a year engagement where you're doing quarterly financial statements and tax planning. What CPA.com recommends, and for those of you who are really looking to grow a practice, strongly recommend that you attend the CPA.com Client Accounting Services workshops. There are a series of, I believe, 4 courses that you can take through them. They generally, in non-pandemic times, do these as roadshows regionally around the country. Now they're doing those classes online, but you actually can get a certification, and these classes help you build essentially the building blocks to build your practice, to build your pricing strategy, to build your business plan. What they recommend, and having worked with helping to grow and close new business in this space, picking a niche is really important. As I said, one of the firms I worked for was an omnivore, and I think they made a lot of bad choices potentially on taking on clients that weren't really a great fit for them. So pick that niche, focus on it, target, grow it, master it, understand with that expertise in a specific specialty, what are the KPIs I need to focus on, both as an accountant and for my clients trying to figure out how to grow the business. Master those and rinse and repeat. Next up is having a staffing plan. Many firms start their CAS journey with staff members that are borrowed from the audit, the tax, or the consulting practice. And what that often means is when that particular service line is in crunch season or busy season, you lose your resources. So one of the things I recommend, one of the things CPA.com recommends, is that you move to a permanent staff as quickly as it's practical to do that. Certainly if you're in a small firm environment where people wear lots of hats, that may not be practical. But if you're in a larger firm with a deeper resource pool, it is something that you want to do as quickly as you can, as quickly as it makes sense. Staffing looks different. Every CPA firm is different. I worked for 2 firms. Cultures were as different as you might imagine for firms that weren't very geographically separated. The way they went to market, their approach, how they market, how they do business development, were very different. So I'm not going to tell you what the right model is for your firm, because you've got to figure that out. You also have to figure out maybe something a little bit different if you are a CAS-only provider. If you have the luxury of being only focused on accounting services, then the way you go to market and the way you do things is going to be really different. I think it's really important to figure out what your culture needs to be. You have to figure out if you want to only staff with professional staff. A number of the firms in the DC market where I live only staff their practices with professionals, people that are on CPA track. That may work in larger markets where larger fees are maybe more palatable. It doesn't always work in the smaller markets. Paraprofessionals seem to be more present in smaller market firms. It doesn't mean the firms are small, but my experience in working in South Central PA was that each of those firms had 1 or 2 paraprofessionals in each office, and those offices may have had, a dozen CPAs. So you've got to figure out what works for you. The other thing I'll throw in, and this is something we do, is we provide offshoring support for transaction processing and bookkeeping. Many firms don't like the idea of doing outsourcing because they don't like giving up control and they're concerned about quality. But depending on the markets you serve and the margin pressure and the difficulty in finding staff, this may be a way that you need to consider going to market. What you may also have if you're in a CAS-only firm is the flexibility to be able to hire remote employees. Interesting stat, again, from CPA.com is that in 2018, fully half of the firms were using third-party service providers for things like transaction processing and data entry. So it's something you might want to consider. This is a model from the CAS workshop that really shows how you build your department. This is probably an accounting services team of 20 or 25 people within a CPA firm. So you see that there are people that are doing payables, that are doing receivables, that are doing payroll. You've got client relations managers. You've got a pretty full organization chart. This is how you have to do things, but this is a model that they endorse. So what I'll say to you is in those firms that are not using paraprofessionals or bookkeepers, they're using a staff senior, somebody with 2 to 4 years of experience, and they're doing everything with those staff seniors. So they're doing payables and receivables and payroll, time entry, doing month-end close, adjusting entries, and so forth, with somebody that's probably costing about $84,000, $85,000 a year plus benefits. And if that's how you have to go to market, or if that's how you choose to go to market, that's great. But this particular graph shows what your loaded labor cost is if you choose to go to work with a staff, you choose to do all of your work with staff seniors, you're essentially paying a loaded labor rate of about $53 an hour. If you have a mix of CPAs and bookkeepers, your bookkeeper is going to cost you about $28 an hour loaded labor rate. In this market, that's about $45,000 a year plus benefits. If you're willing to offshore, firms like Dynamis can offer you a full-time equivalent for about $1,500 a month, which works out to $9 an hour. So you can see, depending on how you go to market and how you choose to staff, you can be working with dramatically different labor rates and labor inputs. And that's something you have to consider when you're looking at building a profitable practice. I've been talking a lot. Christian, I just want to check and see if anybody has any questions in the chat panel that we can address right now.
Yeah, for sure. If anyone has any questions, feel free to drop them in the chat panel. And if not, we can continue, but I'd definitely like to give y'all some time to see if y'all have any questions.
Well, if there are not any, I will move on. One other thing that I forgot to mention earlier is I tend to use the acronym CAS, or Client Accounting Services, but you'll also hear the term Client Accounting and Advisory Services, and I don't want to underplay or underemphasize that advisory should be part of these practices. What I see is one of the biggest differences of advisory services and CAS versus what used to be called bookkeeping and write-up is CAS should be not only looking at past performance, but providing forward-looking decision support. I'll say that again, because I think it's really important. If you are providing accounting services to your clients, you should not only be reporting on past performance, but you should be providing your clients with metrics, with dashboards, with KPIs, things that can help them evaluate whether they should be making, additional hires, whether, if you're in the hospitality industry and your table turns are very low and you have low staff utilization, whether you should be calling people in or whether you should be sending people home. Or closing a section in the restaurant. These are the kinds of things that if you're providing these kinds of metrics to your clients, they're better able to decide how to run their business, not only in the short term, but in the long term. If they're thinking about retirement, how are they going to fund that? How do they maximize the value of the practice as they look at making those major life transitions, whether it's sending kids to college, kids getting married, funding funding a retirement home. Those are all parts of advisory services and CAS. If you're working, whether it's with a medical or dental practice or with a small plumbing and heating contractor. Next up on the list for growing your practice, 7 tips, is for you to have a sales and marketing plan. I know a lot of CPAs who talk about the value of and the fact that their best sources of business are referrals. What I also know is that people don't ask for referrals a lot. And if you don't ask for them, that can't really be your number one source of new business. So especially in this age where we've got people working, maybe 80% of the workforce working remotely, especially knowledge workers, and where most of the accounting that's happening in accounting services is happening through the web, you as a business owner or business leader or practice leader really need to think about how do you go to market, because one of the great things about accounting services is it really isn't a bricks and mortar model. We have an Ohio-based client that is very big in the hospitality industry, and right as we began working with them, this Ohio-based firm was able to pick up a 12-unit restaurant franchise group. All of those locations were in Texas. So one of the great things about being in a cloud accounting provider is you don't have to be down the street or in the next town over from your client. You can serve clients from anywhere in the nation. I've been talking with clients who have a workforce spread out throughout the United States. They have a big presence in the DC market, but they also have footprint and clients in Atlanta and in the Carolinas. So if you're going to effectively market and sell your practice, you need to have a solid website. You need to have a website that tells a story about who you are and what you do. You need to have content out there that will attract potential clients to you. There's a stat from HubSpot, which is a marketing automation firm, that somewhere between 60 and 70% of the shopping that a B2B consumer does is going to happen before they ever pick up the phone and call you or send you an email. They're looking at your website, they're looking at your blog, or if you don't have a website or a blog, they're looking at your competitor's blog, and they may never know you exist. So part of what you have to do is build a solid SEO strategy, build a good website. If you're an accounting services firm that is within a CPA firm, you need to make sure you have a good, strongly branded website with compelling and engaging content. You also need to have a social media strategy. Not all firms have the depth or the resources to have a full-time marketer or business developer, but somebody needs to own that, whether that's the practice leader or you have a marketing or business development partner or resource. You need to have a plan for getting there. There's some great resources available from Hinge Marketing. They happen to be based in the DC area. They talk very strongly about building a team focus to doing sales and business development and accounting services and professional services firms. And I'm a big believer in doing that as well. I talked earlier about how important it is to understand and to know the niche where you plan to grow your practice. In a more traditional niche, in one of the firms I worked for, we had a tax partner, a tax and audit partner who focused on private club business. And one of the things he did very well was he built a national profile. He was published in industry journals. He spoke at national and international conferences. And the great thing that he was able to do for his business is every time he spoke in front of a room, he would walk away with a dozen or more business cards that were literally leads for new business for him. If you're trying to build an accounting services practice, you should be doing the same thing, whether you're focused on small and medium business, dental practices, or nonprofits, because the evangelism that you're doing is going to bring business to you. It's also going to help you get those referrals that we all talk about. From a sales perspective, some of the big barriers that I hear and that I've read about, and frankly that I've experienced with accounting services clients, and these are in order: prospects are price sensitive, and clients don't understand the value of CAS. I think part of the problem is that if CAS practitioners aren't comfortable explaining the value proposition of accounting services, it's going to be very difficult to convince the client that your fees are worth the value you associate with them. I think it's also important, unlike audit and tax work that have fairly defined and industry standard pricing, accounting services is really a different kind of service. And that model that we were looking at earlier that looked at the different labor inputs, like, or the different types of work that you do for clients, including payables and receivables and, controllership. Those different pieces are a lot more challenging to quantify from a price perspective. I believe that when you start the conversation with a prospect about client accounting services, part of what you have to do is you have to explain the value of the work you do. I think a perfect example of how to have that conversation is a prospect I worked when I was at my last firm, who was a 70-plus-year-old CPA and controller in a trade association here in the DC market. And we connected, and he explained to me that he wanted to retire within the next couple of years, and that he saw outsourcing the accounting function as his succession plan for this business. So back up 9 months ago, when he was looking at making an exit over the summer of 2020, I worked with one of my colleagues who runs a cloud accounting practice. We approached this controller, CFO. Long story short, this controller was drawing a salary of about $13,000 a month plus benefits. My colleague was able to put together a package that covered financials, closing, payables, receivables, all of the services that were being done by an in-house employee. And he proposed at $6,000 a month, won the engagement. So from about $150,000 in salary and benefits to $72,000 a year as a contract engagement for outsourced CFO. If you explain the value of what the client gets, not just the cost of the service, that's really the beginning of the journey of making sure the client understands what you can do for them and the value of the work. I'm going to skip over a couple of slides there. I think we covered the sales and marketing area pretty well. Next up in terms of tips is being anticipatory. There's a futurist by the name of Daniel Burrus who wrote a great book called The Anticipatory Organization. And a lot of what he talks about in the book is thinking differently and preparing for the future. One of the things I have said in both this webinar, but as I talk with people about how to structure their practices, is you have to look at this new service called CAS in a different way. There have been historic assumptions about how to build a tax practice and how to build an audit practice that have grown out of 100 plus years of tax and audit work, because accounting services is a new area of focus and it's a little bit different in the way you go to market. I encourage you to think differently and to be willing to embrace a different way of doing things. If anything, I think what's happened over the last year with the pandemic is people have realized that not only in law firms and accounting firms that we can do things fully remotely, that maybe it's a better way or an easier, more productive way to do this work. And there are plenty of accounting services firms out there that are fully virtual and that embraced this before the pandemic. But I think now that we've lived with this for a year, it's going to be difficult to get people back to the office who have found a way to work effectively fully remotely. So when I make the comment about being anticipatory, I think we need to embrace different things, be willing to try new things, and to look at things in different ways. And I think that means looking potentially nationally or internationally at staffing. Again, our firm does remote bookkeeping, so our model has always been offshore. What I am seeing as I talk with new clients and new prospects is many of them pre-pandemic were in a fully remote work environment where their folks came to the office maybe once or twice a month. And in some cases, they didn't come to the office at all. Traditionally with tax and assurance work, the CPA credential is critical. For accounting services, it's not. So hiring people who have good skills but may not be CPAs is a different way of looking at building your model. And I think people are embracing it much more in accounting services than they are in the traditional areas of the practice. I think you need to look at different measures of success in accounting services as well. Realization rates were the watchword at both of the CPA firms I worked for. But, margins and revenue per professional are the kinds of things that are more relevant in the confines of an accounting services relationship. And one other thing I will say that firms need to look at from a compensation perspective is how do you pay your people? If you have a traditional book of business model in your CPA firm, you are going to find yourself butting heads with audit partners when your CAS team is trying to pick up accounting services work from a traditional audit client. But if the incentives are in the right place, and if you are paying for firm performance, or maybe if instead of having the nonprofit audit partners so focused on just the nonprofit audit revenues, but maybe focused on the revenues that come from nonprofits, then having a significant book of business in accounting services and nonprofits is not such a bad thing. Perfect example of that, one of the clients I was able to land when I was with a CPA firm, I got excited when I got a referral from one of my centers of influence about a firm. I thought when he passed the referral that the client was looking for an auditor, was looking for an audit rotation. It turns out the audit for this client was being done by a large regional firm. The audit was $35,000 a year. This particular client we landed as an accounting services client, and it was a $16,000 a month engagement. So we were generating 6 times the fees of the audit, 7 times the fees of the audit, and significantly higher profitability. And in this case, the nonprofit niche leader was getting credit for the accounting services. So we found a new champion for our services when we were able to do that. And if you can find a model where everybody wins and it's not a zero-sum gain, I think the traction of your practice is going to improve rapidly. We already talked about this. CAS firms shine with revenue per professional. Again, one of the great things about accounting services too is that you're getting paid monthly. You're billing monthly in advance in most cases, and you have a regular revenue stream instead of having all the work and all of the revenues tied up in the first 3.5 months of the year, and then all of those revenues that are tied up at during audit season in the fall. Next up on our 7 tips is think like a general manager. The general manager term and that role were really big in large industrial companies like GE and GM. One of the things I like about that model, it's a little different than how we do business today, is that the general manager model had leaders on that track, taking jobs in marketing and sales and HR and IT and engineering and manufacturing so that they could have a more global view of the business. I don't think that CPAs, perhaps until they get to senior levels as partners or practice leaders, are thinking quite as globally as folks who were on the general manager track 20 or 30 years ago. And I think it is important, if you're trying to lead or grow a practice or both, that you're thinking about the effectiveness of your team and the efficiency of your team and the workflows. Are you creating friction in the work and the way that you do the work? Are you making it more difficult for your people unnecessarily because you're using antiquated tools? Those are kinds of things that can get in the way of client retention. They're things that can get in the way of profitability. I talked earlier about being an omnivore. I think one of the things that can happen if you choose to take any client because you're able to land them, you can end up with clients that are high maintenance, that treat your people poorly, that really costs you margin potentially. And from an accounting perspective, we all understand opportunity cost. If you're spending a lot of time and effort and delivering to a client who doesn't appreciate you, who's asking you to charge them lower rates, and maybe on top of that is paying slowly, you're creating a hole. And while it's difficult and sometimes challenging to fire clients, sometimes it's better to do that so that you can get rid of the client that treats you poorly and underpays you and pays you slow for a client who would pay your market rates and would appreciate the work that you're doing for them. So I'd strongly recommend that you look at the entirety of the relationship. Are they a good customer? Do they treat you with respect? Are they costing you opportunities? Finally is documentation, document processes and execution. This kind of goes without saying in the accounting profession. We have cycles for month-end close, and bank reconciliations, and expense reconciliations. It goes without saying, and it really is in the DNA of most firms, that you have to build processes for everything. So you have your close calendars, you build your systems. Michael Gerber wrote a book called The Entrepreneurial Myth, and one of the things that he talks about pretty significantly in the book is that you have to build systems. In fact, this is a direct quote, without documentation, all routinized work turns into exceptions. So you have to build your practice or your business as if you were building a franchise model. The genius of Ray Kroc was not that he wanted to sell billions of burgers. He wanted to create a franchise system that would allow people who bought into the franchise to create wealth. So when you're building your accounting services practice, you have to build procedures and processes that are easily followed. And again, following Gerber's model, you build those systems and processes so that the person with the least experience and the lowest amount of education can actually do that job. Ryan Lazanis is somebody I strongly recommend you follow. He does the Future Firm blog, Future Firm Accounting podcast. He is absolutely a futurist in the world of accountants. Tom Hood is another one of those futurists when it comes to accounting. He has just left the Maryland Association of CPAs and is now with AICPA. He talks a lot about the firm of the future as well. execution and systems are really going to be the key to making your practice effective and efficient, and frankly, at the end of the day, more profitable. Invest in tools, invest in people. I will say that while audit and tax work are really certification centric, that is not the case with accounting services. You are certainly very likely to have CPAs and firm partners running the practices, but the people who are doing that work don't have to be. They should be detail oriented, they should be customer focused, but they don't have to be CPAs. And that's one of the reasons that I feel so passionately about using our offshore team, because these are folks who are very driven by a solid work ethic. They, in many cases, are single head of households, and they want to provide a high quality product to our clients. And so, again, without doing the commercial, don't eliminate outsourcing and offshoring and using bots and other tools as ways of building a more efficient and more effective practice. Because everything that you can do to remove friction is going to help you deliver better solutions for your clients. That's it for the formal presentation. Just a little bit of a blowing our own horn here. I mentioned earlier, provide outsourcing, and we've worked with a number of accounting and accounting services firms over the years. One of our largest clients has been with us since 2015, and we have helped them grow at a rather amazing rate during that time. We specialize in doing bookkeeping and transaction processing. That can include data entry in GL platforms like QuickBooks and Intact, and Expensify, and Bill.com. We also do work with bank and credit card reconciliations. So if you have any questions about our services, I'm happy to talk about those with you. And I will also put up my contact information if you have questions for me or want to reach out to me. Actually, my stuff is in the beginning. These are the Dynamis social media groups and channels, I should say. We will be sending you a copy of the slide deck afterwards, and my contact information is there. I did want to throw it out for questions. I don't know if we have had any questions since earlier, Christian, but certainly happy to entertain any at this point if there are any.
Looks like there's no questions at the moment. I'm assuming you answered any questions they did have pretty well.
All right. Well, thank you for joining us today. You will be getting a follow-up email within the next 24 hours. It'll include the slide deck and some evaluation questions, so we can just have some feedback on how we did today. So thank you again for coming, and have a great Thursday afternoon.